Okay, hello everybody. Thank you so much for joining me today. My name's Shifra and I'm one of the money mentors here at Women's Wealth. So we're here today to talk a little bit about how to make your first investing decision. So this session is all about people if you are again worried or concerned or you've not felt able to make that first investment decision. It's all around about trying to help you guys feel much more comfortable in that. So it would be lovely just to hear and everything as if some of you are investing already, or if you're new to investing and maybe you might feel like able to put a couple of comments in the chat. It would be interesting to see where you are in your investing decisions. So maybe pop that in and that would be really interesting to see. But first of all, just to talk about what we see certainly is we do when we have a lot of clients join us is why is it that particularly women feel it very difficult to start investing? So what we certainly find with certainly our clients is that it's not because women aren't doing it because they don't care about investing or they don't care about their futures and things like that. We find again that women we're maybe slightly more risk adverse. And so we're putting it off maybe because we just don't really know where to start. We don't want to get it wrong. We're worried about losing money and making sort of a bad decision and doing something that we just maybe don't fully understand about. So I think we're often seeing that we feel like people need to know lots more about the whole investing decision before they really start. And so what we'd like to do today is to give you guys a little bit more confidence in that area. So I'm just going to say, I just noticed there was a couple of comments in the chat. So well done. So we've got well done, Rebecca. She's going to be brand new. So hopefully, Rebecca, at the end of this session, you're going to be feeling a bit more comfortable. And Jennifer, also, it sounds like you're new to investing today. So I'm delighted that we've got a couple of women. So even if we get two more women investing at the end of today, I would think that would be absolutely great. So that's what it's all around today. So we definitely find, so this is, we also feel like when we meet a lot of women and looking for advice, that all the women often feel like they've missed some major lesson in life and that they feel like they, often are beating themselves up about it. And what I try to sort of explain to people is that to become a financial advisor, you've got hundreds and hundreds and hundreds of hours of knowledge that you have to build up about investing. And I don't know why we do beat ourselves up, but we shouldn't be feeling bad about having gaps in our knowledge here. And today, clearly, I'm not going to be able to, in 30 minutes, turn you into investment experts, but I want to give you enough skills that you feel like you're able to make that first step into investing. So just moving on, I could do, this slide actually works. So when I think a lot of women start thinking about investing is, or where they get very het up, is kind of on the tactical bit, the actual setting it up. They're very worried about what platform do they go and use, what fund should they use, what market should they use, and sort of we get very focused on those sort of aspects. And you do need to get to those aspects at some point in time at part of investing. And that is obviously to actually get your toe in the water. But actually, there's much more some fundamental questions that you have to ask yourself before you even get to this point in terms around about platforms and what products you're going to invest in and what markets and things like that. But I can understand again why that can be very, again, intimidating for women because when you go onto these platforms, there are literally thousands of things that you can invest in. And it could take you years, obviously, to do all of the research and everything on those different areas. So that's why it is sort of overwhelming. You can get it wrong. So that's why, hopefully, again, if you've got questions around investing or if you've had a look in before today, again, pop it in your question in the chat and we'll make sure we try and cover it at the end. So as I mentioned, it is obviously you do have to get the platform and everything right, but it's not, as I said, there's some questions that you really need to ask yourself before you even get to that point. So the first kind of two questions that you need to really ask yourself is like what are you investing for? And when might you need the money? These are two really, really foundational sort of questions for yourself. So we've got, I don't know, again, if you guys feel comfortable, maybe putting some, why you are thinking about investing. But, if we have people who, for example, who are quite young, who are looking at maybe trying to get their, buy their first property, and what they're wanting to do, maybe is they're saving some cash and they want to invest it so that the money grows to maybe buy a first property. Again, we've got clients on the other scale who are maybe are investing because they want to retire as early as they possibly can. And so therefore, it's a very, very decision about what they might invest in and when they're going to need the money for. You might be trying to build up a pot of money for your kids' education. So again, what is the money for and when you might need it are two really, really important decisions. And what I would say in terms of just sort of some general pointers for you is that what we see with risk is that generally the longer the time that you're looking at the investment for, generally that you can take a slightly higher level of risk. If you're looking at the money sort of as a short to medium term investment, then you actually don't want to be taking as much risk. Again, if it's a long term investment, if there's some short term movements in the markets, you're not really too worried about that because again, you're looking for is long term return for that investment. Again, but you're going to need that money in the short term. Like again, you're thinking about like buying a house in the next 2 to 3 years, then maybe actually investing might not be the right thing for you to do. It might be better to actually keep the money in cash. So again, if you guys got any questions around your own specific circumstances, pop them in, and as I said, and I'm happy to answer any questions that you guys have. The next thing I would say is, have you got enough money in cash, first of all? So we don't allow any of our clients to invest until they've built up an emergency fund. And that emergency fund, we would at least, as a minimum, we'd recommend that you've got about 6 months worth of your essential expenditure in cash before you even think to start to invest. So it may be that you're actually not quite ready to yet invest and you need to build up again you need to have again build up on your sort of financial resilience before you're sort of ready to take that next step. So again, so you at minimum of 6 months, but again, if you've got any sort of short-term expenditure that you're going to need above that, for example, you're buying a car, you're doing a bit of renovation work on the house, or you are buying a house, you're looking to buy a deposit, then again, investing, it might not be the right thing. It might be better to have more than even that 6 months worth of money in cash. And the reason why we say also, why you should have an emergency fund is that you never want to be in a situation where you're having to take money out of out of your investments at a bad time. So, for example, you'd probably, be asleep pretty much if you weren't looking at what's going on in the markets today. We've got obviously this war in Iran, and so markets haven't been doing great at the moment. So again, if you're an investor, if you never really want to be in a situation where you're desperate to have to take money out of your investments, you don't want to take the money out at a really bad time in the marketplace. Again, what you want to do is obviously buy low and be able to sell at a high price. So you want to, sell your investment when a market's at a much better time in the marketplace. So the emergency fund gives you some buffer so that if anything does happen, you're not having to sell from your investment at a really bad time in the marketplace. So that emergency fund protects you, and that's why, as I said, we don't allow our clients to invest until they've built up their own emergency funds. The next thing you need to ask about is, where does this fit with all of the other priorities that you've got? So again, in terms of investing, there are steps that we would say is before you're ready. So the first thing as I would do is you need to have a really good you get your fundamentals in place. You should be managing your expenses really well. So first of all, you want to make sure you've got that income and your expenses well balanced. You've actually got a bit of surplus money to actually be spending. If you don't have surplus money, then again, investing is not the time. It's just you can't afford to invest. And you should be working on, as I said, go back to sort of step one, which is kind of just managing your expenses. The next thing is if you've got any debt, And I mean, sort of, I'm talking about bad debt, not good debt. So, as I said, if you've got a mortgage, that's probably okay. Or if you've got a student loan, that's what we'd consider as good debt. But I'm talking about bad debts. I'm talking about like credit card debt, consumer debt, car loans, things like that. Then perhaps maybe investing isn't the right thing for you at this point in time. You're better off to prioritize on paying down your debt first, really, in terms of priorities. So investing really comes from that situation again, is where you've got really good foundations in place, you're getting a bit more surplus money, and now you're ready to take that next step for investing. So the next question that you probably are going to have to be thinking about is, what do I invest in? So you may have heard of ISAs, and when we're talking about ISAs here, we're talking about stocks and shares ISAs. So those are, products where you're actually investing in the stock market, or again, you might be thinking, okay, should I invest in a pension? Or actually, should I be investing in both? So, and there are different pros and cons in the different products and things that you can invest in. So an ISA or a pension is just it's what we called it, it's a product which is wrapped as it's got a tax wrapper around it, and they've got different benefits. So a pension is really a long-term investment vehicle. And it's one of the ones that actually gives probably the best in terms of tax relief. So it's probably the best product to get from if you're just looking at purely from a tax perspective. However, the only problem is once you put money into a pension, you cannot access it at the moment until you're 55. And that's actually increasing over the next couple of years to up to sort of 57. And the government is planning to sort of always have that like sort of 10 years before state pension age. So again, if you're thinking again, you might, you bought your first property, but you're thinking, you might need another sum of money to, because you're looking at upsizing, or again, you want to have that money to do a kitchen refurb or something like that. Well, if you can't access it, so once it's gone in, you can't ever take it down. So then again, a pension's maybe not where you want to put all your money in that situation. And an ISA is a much better sort of product to use, because you can access an ISA at any point in time. So again, it's that really thinking about when you're going to need the money is being really, really important. So that's why I said you've got to ask yourself that question first before you get onto the real tactics of what fund you're going to use and what product and things like that. So think about that. For our clients, often we'll have both. We actually feel that a lot of our clients should have maybe a short to medium term sort of investments, and also some long term. So again, we've got to be thinking about both in our lives. So again, you actually might want to have both products open at some point in time. But think again, you might only want to start with one at first point in time. And the second thing, the last thing that you want to really think about again is really what is affordable for you. What's affordable, and also what you feel comfortable with. So just to let you know, you don't have to have like, thousands stacked away before you're ready to invest. You can, most of the platforms these days, you can invest as little as maybe just £25 a month. And then obviously if that can go up from there. So again, think about again what you feel like you can afford. And also, if you are concerned, remember you don't have to invest everything. Dip your toe, just get started, dip your toe in, and just sort of see how you get on going there. So finally, just things to watch out for. From again, things that we have sort of seen, first of all, is again, we are seeing women are waiting too long to invest. It's often until, it's not until like our laters and we're kind of thinking about retirement, and we're kind of thinking, my God, we haven't got started. So what we say, there's a phrase that we say in investing, it's not timing the market, it is time in the market. So you just want to get in as soon as you possibly can and get going. And that is the key thing. So again, I'd encourage all of you, basically, any of you who are interested in starting to invest, is to get going as soon as possible. And if you don't have the confidence to get going yourself, that's why there's people like ourselves, independent financial advisors who are there, and we can manage the investments for you. But taking that first step is really, really important. The next thing is, if you're going to do it yourself, try not to overcomplicate things. So, as I mentioned, there are thousands and thousands of funds that you could be investing in. There's loads of different stocks, again, thousands of stocks of companies that you could go and invest in. And I would say try not if you're a novice at this, or if you're just really starting, then my recommendation is go for a fund which is managed by something else, by a professional, and probably just choose a multi-asset fund. So if you're again not sure again where to start for these things, then there's a website called Boring Money. I'll ask Carolyn just to pop the website into the chat box for any of you who are looking at getting started. It's a great resource, and it will sort of tell you about sort of some recommended funds that you can use out there. But again, I would just like choose a managed fund again, rather than you trying to pick stock and trying to overcomplicate or make things any more difficult than they are. Next things I would say is ignore any things that you're hearing in the news too much. Again, as I said, stick to something simple. It's managed, it's a multi-asset fund that will basically just sort of grow over time. Um, don't worry about what you're hearing sort of in the news right now, or what the latest flavor thing is. Those are things where I would probably just say is trying to sort of ignore whatever's going on. So right now, for example, obviously we've got the war in Iran. At times of like war, often people want to go into gold and buy gold. Well, again, gold actually isn't, it's a commodity. It sort of goes up over a time, up and down over time. It's not really, it doesn't really operate in the same way as an investment. So again, that's why I said is go into just a multi-asset fund. It will potentially have some commodities in there, but it'll also have other things in there. Um, if you're probably hearing lots of things about crypto at the moment. Again, crypto again is a commodity, and often people don't understand it. If you don't understand something about an investment, don't ever invest in. So don't feel pressurized, and don't invest in anything that you don't understand. So again, always, that and if you're not sure, again, come to a professional, and a professional will help you take that for a step. And then, as I said, we've already talked it before, but really think about that emergency fund. Make sure you've got enough in cash before you really start thinking about investing. So that's all I was going to cover today. I'm going to start sharing these slides. But I hope that was sort of useful for those of you that are just sort of new to investing. I just want to leave the rest of the time to a couple of questions. So, let me just have a look through some of the questions, the topics that we've got here, and I could just go through some of them. So, Dominique, that's great. So she's looking to start investing. That's fantastic. So hopefully you found some of the comments that I've talked about here today. So Jennifer's just basically, she's a trainee accountant. So first of all, good luck on your career there. I'm sure you'll do extremely well. And you'd like to build a diverse portfolio, so that later in life you can provide for family and possibly retire early. So Jennifer, I don't know if you feel brave enough to come off and just if you want to sort of, if there's any specific that you'd like to know, or about how to start.
Hi there. Hi. I'm
Well done,
very new to
Jennifer, for
this,
coming
so
on.
I'm just no problem. Thank you very much for all the information that you've talked about. It's been so very helpful. I'm very new to this, so I'm just still doing research and trying to gain a bit of knowledge on this
Mhm.
topic. So one thing I've been hearing about is different trading platforms, for example, trading 212 and things like that, and eToro and things like that. So I'm just sort of trying to do some research on that. I've never invested before, so this is very new to me. So I'd like to start off very little and then build up as time goes.
Yeah.
But I'm just trying to find out where to start, where to dive into, which platforms are best, and things like that.
Great. Well, let me just give you some thoughts about Jennifer just getting started with that research. So you've got probably from a retail side of site, you've probably got four major platforms, just to kind of give you a bit of information. You've got Fidelity, you've got Hargreaves, Lansdowne, AJ Bell and Vanguard, I would say, are the four more traditional ones that have been around a long, long time. And then you've got some newer ones which are coming online, which are sort of like Interactive Investor, Trading 212. Those are sort of some of the new, more mobile ones that are sort of just coming up, and they're fairly new companies. But again, good to start. The platforms are all a little bit different. They all have different costs, and I would say to you, look at the costs. That's really that's quite important because obviously when you've got an investment, you want to keep as much of the return as possible. So do have a look at that. And then the other thing is that they do is different platforms will be have different numbers of sort of funds available. So for example, Hargreaves is probably one of the most expensive ones, but has the most choice. For example, so again, if you're an investor and you want stacks of choice and you want to be able to do pick stocks and shares and have a go and have a little play at that and loads of different funds, then they have again probably the widest range of things, but again, they're probably the most expensive. What you're going to find probably Fidelity, AJ Bell, and Vanguard are a bit cheaper. They don't have quite as much choice. And then as I said, you've probably got slightly again less choice on some of the newer mobile platforms. But again, all like none of them, all of them again, as long as you're going for a good reputable company, they're all absolutely fine to use. And as I said, it's just getting going with something. But so I don't know, is that helpful, Jennifer, in terms of some of the platforms and it just giving a bit of perspective from my
Yeah.
side?
Yes, it is very helpful. Thank you. I've made a note of the platforms that you've just listed there, so I'll just go on and do a bit more research. Thank you
Yeah.
very much.
No problem. And just to let you know, the difference between the probably the platforms that we are using, like as advisors, and then you guys are on the retail, is normally is the so there'll be platforms which we'll specifically use, which are just for like professionals.
Mm.
Those are normally cheaper than what you can get in the marketplace. And again, what we have is a bit more access to more sort of professional sort of funds again, which you won't have as much access to. So that's the sort of difference. And again, because you're buying through an advisor and everything is normally we get these sort of things at a discount. So that's the sort of advantage of using maybe an advisor versus a do-it-yourself. But then, of course, you have to pay advisor fees. So obviously, there's the downside of actually that. And
Mm.
obviously, it's great if people don't feel like they can afford advice, then at least they have got access to these other retail platforms, which is great.
That's great.
Okay.
Thanks a lot.
Um, well done. So Bernadette, it just looks like she's investing in a global ETF. That was so well done. A global ETF. So ETF stands for Electronic Traded Fund. And normally, funds are again, what again, we just talked about platforms, but also with funds, you also want to look at the cost of the fund. Global ETFs are what they're normally called like a passive fund. So passive funds basically, so they're just following a marketplace. That's what that means. And they're normally very, very cheap because a lot of the trading, things like that, can be automated. So that's a nice one to start with. So well done, Bernadette, for getting going. Do you feel, Bernadette, sort of brave enough to tell us what global ETF that you chose?
Yeah, I use Trading 212 because I think it's free.
Yeah.
And basically I picked the God knows what it is. They're all a load of letters, but SPDR MSCI All Country one because it's got really low. Yeah, it's very cheap. So I just went
Okay.
cheap in it, and it has a lot of cover. I've been following a
Great.
few people who've given different advice, and that one seems to be the one. It's an ACWI ETF,
Yeah.
if that makes,
Yeah, that
yeah.
sounds great. So
They're,
I like the idea of that one. Obviously, I haven't done the research specifically on the one that you're talking about, but I like the fact that it sounds like it's an all country. So again, for those of you who are very new to this, what Bernadette has chosen is it sounds like a really well diversified. So you want to have a look at like how many countries that you're invested in, how many stocks you're sort of invested in. And again, those are really important things to again is because you want to be invested in as many things as possible. So again, you're not, if one market's not doing very well, another market will be doing well. So for example, right now with the war in Iran, although a lot of the stock market is down, guess who is doing brilliantly? It's all the oil companies. So again, if you're invested in oil and in all of these other companies, that sort of helps sort of reduce the risk that you have. So well done, Bernadette. Sounds like a great choice. Let's have a look at Grace. She's consolidating her work pensions into one platform. Any good platforms to recommend? Thank you. Grace, thank you very much. Happy if you wanted to come on a little bit more. So, what I would say again, if you're looking at consolidating some of your work pensions, so first of all, I think again that is a great idea. It's just a bit of a headache, isn't it, when we've moved job from job to job and we've got lots of just different, in the accounts, then pension accounts. So definitely a good idea to consolidate. You could look at if you're still employed at the moment, you could consolidate your pensions into your current actual just employer pension. So that's an option. Alternatively, yes, you could consolidate them all into a SIP, what that stands for self-invested personal pension, on and again any of the platforms that we've just talked about. So again, if you're going to do that, though, I would recommend that you could look at any of the ones that we've talked about. I might think for a pension because there's some of the newer sort of just like trading 212 investor, interactive investors. Some of them don't have quite as much functionality as these more traditional ones. So if you're going to do it as a retail product, then I would probably go for more of the traditional ones because pensions actually are quite specialized, I would say, and it's you need actually more functionality, and because they're such new companies, they sort of haven't brought out all of the functionality yet on some of these platforms. So I'd probably look at more traditional ones. But you could, as I said, you should also have a look at your current employer pension. As I said, if you've already employed, and you could just consolidate your other pensions, your other from past employers, perhaps into that pension. The good thing about employer pensions is that because they're group pensions, so they're buying on behalf of lots of people, they're normally a bit cheaper. So again, that means that you're keeping a bit more. And as I said, there's normally a fund that's been selected for you, a default fund, but there's also other funds normally that you can choose. So, and again, if you're worried about this, Grace, or if you need some help, obviously come to an advisor. An advisor can help you do this. Is exactly what we're paid to do. Clara, great to hear that you're looking to start to invest. Well done. What do I think of money market funds for money you need in the short term? Is it easy to take the money out when you need it? So Jessica, good question. Yes, you can. Money markets are certainly funds that you can certainly are available. They are definitely more of a short term investment. So yes, I'd say the risk is slightly lower in that area. Yes, you should be able to take the money out when you need it. So in terms of investing, you can normally, it's not completely accessible like a bank account. It normally takes, I would say, up to maybe 10 days to get the money. So that's what I would just sort of say for, let's say, trades to clear, and then basically for the money to move from whatever account that you're in into, let's say, your current bank account. So that's the sort of rule of thumb that we would tell people in terms of, so the money is accessible normally in the stock market, as I said, as long as you're not on a pension. As I said, if you put your money into a pension, you cannot access it at all until at least 55. But if you're, let's say, in a stocks and shares ISA, you can take that money out at any point in time. But as I said, and it's not 100% accessible. It's just, as I said, but 10 days, I think most of us can wait 10 days to get the money. Or again, if you're organized, you should be able to. Okay. What is the best SIP fund to set up? I have a trading 212 cash emergency fund, Vanguard stocks and shares account, which is managed. Okay, so Beatrice, I'm not quite sure. As I said, so are you asking what fund to go in for your SIP? Just, yeah, would you feel brave enough
Yes,
coming on?
yes, please, yes. So I have so many pensions I want to because I have contracted for most of my working life. I've always been paid by an umbrella company, and they automatically use Nest, which is the government
Yeah.
pension, and so I now want to go permanent, but I want to put all those pensions into one, just to make it easier to manage. So that's what I'm looking for at the moment.
Okay, so so I mentioned similar to in the last question, you could just consolidate. So whoever your new employer is, you could they will obviously there'll be an auto enrollment for you into their pension scheme, as long as you're earning a certain amount and that you sort of obviously you qualify for that. But you could just push all of your pensions into your new employer pension. As I said, that there might be a benefit that they're normally, as I said, it's not all the time, but they're normally better value because they've been these being group pensions, as I said, and so they can normally get preferential rates. So that's one thing. I probably, as I said, if you're looking at your, one of the other platforms, I probably would choose one of the more traditional ones. I said if it's a pension, just as I mentioned, because of the functionality. So those are the things like, as an example, Fidelity, AJ Bell, Vanguard, or Hargreaves. Again, you might end up paying a little bit more, but in that situation, I think you're getting, as I said, they're more sophisticated products, and I think you're getting better value for your money. To be honest, then I know, whilst I know that some of these really new ones are cheap, they're sort of basically buying clients, but again, they haven't fully built out all of the functionality. So that would be my view on that one. I hope that was useful. Sarah, she's with Women's Wealth, but was so much have taken part of these broadcasts and chats from last October. Oh, sorry, good. That's fantastic. Good. Love you. Thank you for the feedback. Yeah. Anyway, so I've just realised we have run over time, so I think I better call it a close today. But I hope that was useful. I tried to get through as many of the questions that you had. Just a quick reminder, you can join Women's Wealth free by signing up to our Enable membership. And then you can also get access to all of our curated content like we have today. We've got courses on things like how to start investing, and then other resources just to help you manage your money and create that fabulous financial future for yourselves. Just a reminder, we are authorized and regulated independent financial planners. And for those who need a more one-to-one service, you can upgrade your membership at any point in time to suit yourself. So if you'd like to explore about working with us and you feel like you're going to benefit and improve your financial well-being, please feel free to book a free discovery call with certainly with myself or any of the other money mentors that we've got here at Women's Wealth. And I hope you enjoyed the session today. So thank you, ladies, and enjoy the rest of your Friday and have a fantastic weekend.
Thank you very much.